Welcome back. I'm Jackie DeAngelis in for Maria Bartiromo. It's Friday, October 14th. September retail sales are crossing just moments ago. And the number for September is flat month on month. We were expecting to see it up 0.2%. Of course, this is a measure of how the consumer is going out and spending right now with respect to the retail companies. Consumer represents 2/3 of the overall U.S. economy. Year over year, up 8.2%, so there's still some strength there. Joining me now to react to this as we're watching the markets as well, Dow futures indicated higher by 51 now, is Strategic Resource Group Managing Director Burt Flickinger. Burt, great to see you this morning, and thank you so much for joining us. Your reaction to this number straight off the bat.
Jackie, the numbers are commercially concerning because adjusted for inflation, even prior 12 months or prior month, we're still down minus 1% or more. So it shows, as you wrote so well in the fear factor, consumers aren't spending when they should be. There's savings, but people are taking on more credit card debt, and 46% of consumers say her or his financial condition is poor.
Yeah.
So this is a weak retail number and very concerning going into the holiday season.
Right, and that was my next question. Obviously, we're seeing all of these companies start to roll out the deals earlier and earlier. It's not even Halloween yet. We had the big Amazon sale event, and other companies are planning to sort of start their retail Christmas season much sooner. And so that gives us the indication that they are worried about what's to come in the holiday season. And it sounds like this number sort of gives us a sense that the consumer is just tepid right now.
And confirming you're completely correct, Jackie, Numerator put out a report that Amazon's Prime Days very recently were very disappointing, adjusted for inflation, flat to negative after a weak Prime Day in July. So there's consumer fatigue, and consumers are more cash and credit constrained than they ever have been since the 1970s during peak inflation during that period.
I just want to review some of the rest of the numbers. So 8.2% year over year, month over month, we were unchanged. Ex autos up 0.1%. Import down 1.2%. Export down 0.8%.
The import is really concerning, too, because in San Pedro Bay, the ports for Los Angeles and Long Beach, the biggest ports of entry for retail goods in the U.S., almost all the backlog's been cleared. So all the goods are coming in from mainland China and the Asia-Pacific region. And if the imports are down, that shows consumers aren't spending. The retailers are, quote-unquote, RTV, return to vendor, or just massively canceling orders.
Okay. And breaking this morning, Kroger acquiring rival grocery store Albertsons in a deal that values the company at $24.6 billion. This is one of the biggest deals in the history of the U.S. grocery industry. And we also had another read on inflation yesterday. The September Consumer Price Index coming in hotter than expected, 8.2% year over year. So what do you think?
It's a really important Kroger acquisition of Albertsons. Full disclosure, I've worked with both companies and most of the Federal Trade Commission chairmen, chairwomen, and commissioners. And the FTC is institutionally well-intended, but inadvertently really regrettable consequences, where 10 of the top 25 supermarket chains have filed for bankruptcy or liquidation. Kroger and Albertsons both have the skill, but they need the size and the scale to compete with Albertsons, compete with Amazon, Walmart, Target, Costco, et cetera. And the brand manufacturers like my alma mater, Procter & Gamble, and others are prejudiced against the supermarket sector and shoppers who shop the supermarket sector by not passing along the deals. So this combination would let Kroger and Albertsons get private label from 25% currently to 40%, and in return put more pressure on the national brand vendors to give consumers lower prices. And we're writing the second volume of the book, The Explosive Growth of Private Brands in North America, where private labels 60%, Canada, England, Scotland, Ireland, New Zealand, and Australia, and a lot less in the U.S. So we need better private label, which Kroger and Albertsons are doing at a better value to give consumers a better cost of living.
And it's such an important point, because so many people tell me anecdotally that they are buying more private label now than they were previously, just because of the problem with inflation and that the top, the name brands cost significantly more. People are looking to save that 50 cents cents on a box of cookies or whatever it is, because it matters right now.
And the key takeaway, Jackie, to your important points from our Strategic Resource Group research is before COVID, the national brand manufacturers used to spend 25 cents on every dollar of sales in discounting and promotions. That dropped to less than a dime. And the promotions are taken away on the branded products, so it's literally double inflation. The 8 to 9% you referenced earlier, plus the 20 to 25% promotional spending. So the Federal Trade Commission really needs to approve the deal, and both companies need to find the right expert firms so they don't have really regrettable consequences like the failure of the Ahold Stop and Shop King Cullen merger and the Staples Office Depot merger, where hundreds of thousands were spent on acquisitions that should have gone through, but the FTC really disallowed and largely prevented.
So if I'm hearing you right, Burt, this is partially about how the industry is changing, partially about, the discounters and also Amazon getting into the game, changing the landscape, making it more competitive. But it's also a sign of what's happening right now with respect to this embedded inflation in the economy.
Embedded inflation and also living wages with good benefits. I do a lot of work with the JLMC, the Joint Labor Management Council, the nonprofit group between the leaders of organized labor and the leaders of the unionized chains. And the unions are really concerned because we're understored for supermarkets across America. So, for example, in Southern California, the biggest market for Kroger and Albertsons, hundreds of stores have been shut in the last 20 years. So the merger needs to go through to expand both in existing markets and new markets where they need more competition, specifically Florida and the whole Midwest, from Kansas City, St. Louis to Oklahoma City, and New York and Long Island, one of the top markets where neither Kroger nor Albertsons has operated for nearly 60 years.
Burt, we've been in an economy this year where we've had 2 straight quarters of negative growth. We see the inflation number continues to be above 8%. Are we in a recession right now or not?
Yes, definitely in a recession, as you've reported well for so long, Joe. Yeah. And this is a recession, the worst my father and I have seen since the 1970s, when people literally could not afford shoes and were wearing plastic bread bags from supermarkets tied with rubber bands around their feet in the fall and winter months. It's really worrisome.
I just want to point out that Fed-engineered demand destruction appears to be working quite well. We saw that in today's retail sales report. As you noted, after we take out inflation in real terms, in terms of unit sales volumes, retail sales fell in the month of September from the previous month. And this makes me wonder what's going to happen to the economy if the Fed does go ahead and raises Fed funds as high as 4.4% by the end of this year. That's just a couple of months from now. That could be devastating to the economy.
John, you're raising the perfect points, devastating, and we see no letdown of inflation because if you look at foxweather.com and AccuWeather, we're going to have a very cold winter. People's home heating prices will be the highest ever, and the demand destruction is going to be there because people can't afford clothes, food, gas, and equivalent rent and heat for their homes.
I just want to raise one important point, and that is during the previous economic recovery, we got Fed funds no higher than 2.4%, yes. And yet later in 2019, the Fed had to lower the federal funds rate. And I believe that was a fundamentally stronger economy compared to what we have today. So we could be in for some big trouble come 2023.
John, you're right. You see mortgage rates double, gasoline prices double. The real food inflation is reported by the United Nations has been 40% U.S. and worldwide during the last 2 years. So demand destruction and more concerns for consumers, kids with out of control living expenses, and the cost of education is out of control, too.
Not to mention the fact that real wages are down. Right?
Real wages are down, Jackie. You're so right. And hours are being cut, so weekly income's down.
And I'm worried that is the next shoe to drop, that we are going to see this all start to trickle in more significantly to the labor market, and people will start to get laid off. And that's when you really start to realize, okay, might be, you know, a deeper recession than the president is indicating.
And that's why the president's support is so essential for this Kroger Albertsons merger, and support from the U.S. senators and the state attorney generals in every state are absolutely essential too.
Burt, so good to see you this morning. Thank you so much.
Great to team up, Jackie, Joe, and John.
And John.
Thank you.
See you.